Good morning, ladies and gentlemen. I want to welcome everybody to FXTM's Week Ahead Market Themes to Watch Out For. Before moving forward, I want to confirm if everybody can hear me clearly. Excellent. So what we're going to discuss today, firstly, we're going to have a review of the markets last week. Last week was very interesting, and I think everybody's quite excited to see what's happened last week. After, we're going to discuss the key themes to look out for in the week ahead. It's very important to link the events of last week and how they could impact the key themes we can see in the week ahead. Thirdly, we're going to have a breakdown of the economic calendar. Finally, we're going to have a technical and fundamental setups discussion. And if everybody has any questions and answers, this could be done at the end of the session today. A review of the markets last week. I must say, last week was certainly quite exciting and eventful for financial markets. I believe one of the main themes was about the euro. It was the euro story. So the euro actually weakened against a basket of major currencies last week, thanks to the European Central Bank's caution. The euro found itself under notable selling pressure after Mario Draghi was cautious during his press conference. As widely expected, although the European Central Bank left interest rates unchanged and monetary policy on hold, the key takeaway from the meeting in last week was that they removed the easing bias, which was seen as a first step towards monetary policy normalization. So what this means is the European Central Bank is slowly moving away from easing monetary policies to a situation where we can see them ending QE by the end of 2018 and even moving forward with raising interest rates by 2019. So although this was seen as a small step towards monetary policy normalization, this could be seen as a big step for the euro. Looking at the dollar bulls were interestingly unimpressed or unmoved by last week's blowout NFP figure. So NFP actually exceeded market expectations in February by printing at 313,000. I think the main reason why the dollar actually weakened despite the impressive NFP figure was because wage growth failed to meet market expectations. So we had a situation where we had a blowout NFP figure, but wage growth disappointed. It must be kept in mind that without us seeing signs of wage growth acceleration, this could weigh on expectations of inflation in the United States rising. And of course, if inflation is not rising, this will ultimately cause markets to reevaluate how many times the Federal Reserve could raise US interest rates this year. In the commodities arena, gold remained volatile thanks to conflicting market themes. So, on one side, we had risk aversion and the ongoing uncertainty, especially in Europe. On the other side, we had Trump agreeing to meet North Korea, which boosted weak sentiment. So, and finally, we also had stock markets that were rising. So when you put all these four things together, we can see why gold remains in a wide range, with the metal currently trading around 1,324 as of speaking. Speaking about Trump, so interestingly, financial markets offered a fairly muted response after Donald Trump actually moved forward to imposing his steep tariffs on steel and aluminium. My thoughts was probably because Donald Trump decided to was open yeah, was open to exemptions. This is why probably the market reaction was overall quite soft. Finally, looking at stock markets remain gripped by the inflation and interest rate story. We saw on Friday that stock markets ventured higher after the NFP figure because the US jobs report showed weighed on expectations of higher rates. This is why we saw stock markets trading higher. But the fact that this happened continues to highlight how markets in general remain highly sensitive to rate hike expectations and interest rates. Okay, so recapping from last week, the euro was weak. The euro weakened thanks to the cautious ECB. The dollar bulls were unimpressed or unmoved by the lower NFP figures. Gold remains volatile thanks to conflicting market themes. Markets offered a fairly muted reaction despite Donald Trump imposing the steel and aluminium tariffs. And stock markets remain gripped by the inflation and interest rate hike story. So the key themes to look out for in the week ahead. I think an important theme we should not overlook is dollar sensitivity. With the dollar, a currency which is highly sensitive to monetary policy speculation. Sensitivity could be seen ahead of the CPI and retail sales report this week. If inflation in the United States is rising or beats market expectations, this is likely to boost the dollar because it raises optimism over the Federal Reserve raising US interest rates at least 4 times this year. The same with retail sales. Retail sales, it's a very important attribute of GDP in the United States. A solid retail sales report should boost sentiment towards the United States, and ultimately such would support the dollar. Alternatively, though, if inflation and retail sales both fail to meet market expectations, such is likely to weigh on prospects of high US interest rates, and this would weaken the dollar potentially. Looking at the euro could remain wobbly as investors continue to digest the European Central Bank meeting. As I said, the main takeaway last week from the meeting was how the European Central Bank removed the easing bias, which was seen as a small step towards monetary policy normalization. While a normal situation such should boost the euro, the level of caution Mario Draghi displayed regarding, the political developments in Europe, the impacts of Donald Trump's steep tariffs, all this together, and lastly, the fact that inflation in Europe dropped to a 14-month low at 1.2% in February, all caused investors to reevaluate when or if the European Central Bank would move forward with raising interest rates in 2019. Looking at gold, I think gold continues to search for a catalyst. We said earlier that gold is impacted by conflicting themes, and this is why the yellow metal remains in a wide range. What could this catalyst come in form of? Could it come in form of renewed expectations of higher rates, or could it come in form of the fact that central banks across the globe are moving forward with actually raising interest rates with the end of era of easy money coming to an end? Could this come in the form of uncertainty, geopolitical risks? Time will tell, but what we can see is gold is likely to remain in the wide range as gold is likely to remain in a wide range until that catalyst is formed. Looking at all markets have been a roller coaster ride. It's two sides of the story. On one side, we have optimism over OPEC's production cuts, eventually rebalancing markets. But on the other side of the equation, we have rise in production from US shale, which continues to fuel the oversupply concerns. And because these two key themes are smashing together, this is why we can see oil markets quite volatile, trading in a messy range with prices around $62 as of speaking. All market volatility is likely to become or remain a recurrent theme until OPEC comes forward with enacting extraordinary measures to overcome the oversupply woes. So let me recap once more the key themes to look out for in the week ahead. We have dollar sensitivity ahead of the CPI and retail sales report. Euro to remain weak and wobbly as investors continue to digest last week's ECB meeting. Gold searching for direction until we have a catalyst. And finally, oil market vulnerability amid the oversupply concerns. Does anybody have any questions before we move forward with the economic calendar this week? Okay. So breakdown of the economic calendar from today to Friday the 16th. So Monday is fairly light on the economic calendar. We have Retail Bank of New Zealand Government Spencer speaking later in the evening. Naturally, how it works is if he sounds hawkish, this is likely to support the New Zealand dollar. If he sounds dovish, this would weaken the New Zealand dollar. On Tuesday, we have the annual budget release for the United Kingdom. This is simply an important document that outlines the government's budget for the year. So I think this likely to include the expected spending and income levels, borrowing levels, financial objectives, and planned investments. So all eyes will be on Philip Hammond. Naturally, he continues to express optimism of the United Kingdom and economic growth. This should support the sterling. Alternatively, though, if he maintains a cautious stance and he brings out how the Brexit uncertainty continues to impact economic growth and sentiment, this could eventually weaken the pound. We have CPI on Tuesday in the United States. As we said earlier, this is very important, especially when the dollar has become a currency which is highly sensitive to monetary policy speculation. Any signs of inflation moving higher in the United States would push the dollar higher simply because it boosts market expectations of higher US interest rates. Alternatively, though, if CPI fails to meet market expectations, this should weaken the dollar as it weighs on prospects of higher US interest rates. Wednesday will be a big day for the financial markets. We have a bucket load of economic releases. We have the industrial production in China at 2 a.m. At 8 a.m., ECB President Draghi speaks. I believe he's due to host a conference at the Institute of Monetary and Financial Stability in Frankfurt. So this will be interesting to what he says. If he doubles down on his cautious stance last week, this should weaken the euro. If he suggests something different and he's optimistic, the euro could find support. At 12:30, we have the all-important retail sales in the United States. 2:30 p.m. crude oil inventories. As we said earlier, crude oil has found itself vulnerable to the oversupply fears, and any signs of there being a build in crude oil inventories on Wednesday should end up weakening oil prices. At 9:45 p.m., we have GDP in New Zealand as well. Thursday, we have the SMB monetary policy meeting. And Friday, we have the building permits in the United States. So we could say probably will be the calm before the storm because today is fairly quiet. Tuesday we have the annual budget and CPI, but Wednesday will be the big day where we could probably see a lot of action in the financial markets. So the fundamental trading setups I'm looking for this week. Okay. We could see how sentiment was supported by Trump's acceptance of a meeting with North Korea. It was almost somewhat symbolic and such a supported appetite for risky assets. If sentiment continues to improve this week amid these developments, global equity bulls could find some sort of support. I said earlier, looking at the dollar remains sensitive to monetary policy speculation and could turn volatile depending on the outcome of the inflation report on Tuesday and retail sales on Wednesday. Will the pound US dollar turn volatile ahead of the spring statement? We'll see. As we discussed earlier, depends on Philip Hammond's tone. Any signs of him being optimistic over the health of the United Kingdom could boost the pound US dollar. Alternatively, as I said previously, any signs of Brexit concerns, caution and uncertainty would eventually end up weakening the pound. Now looking at oil prices, we can compare oil prices, with how it's looking to it flickering violently, to a candle flickering violently. So our oil prices flickering violently before eventually burning out. We can see how oil markets eventually, the sentiment towards oil markets was incredibly bullish at the start of the year, thanks to ongoing supply disruptions, geopolitical tensions, and inflated optimism that OPEC's production cuts would eventually rebalance markets. Things have changed because production from US shale has risen incessantly, and this has stimulated fears of an oversupply. Price action continues to suggest that oil prices are under notable selling pressure, and if the oversupply concerns persist, this is likely to result in further downside for oil markets. So this week we'll be paying very close attention to if there's a building of crude oil inventories. Naturally, if this happens, this should inspire oil bears with enough inspiration to drag WTI crude and Brent oil prices lower. So just to recap once more, sentiment remains supported by Trump's acceptance of a meeting with North Korea. Dollar sensitivity, thanks to, dollar remains sensitive to monetary policy speculation with the inflation and retail sales in focus. Pound volatility, or pound to become increasingly reactive ahead of the spring statement. And finally, oil prices flickering violently before potentially running out thanks to the ongoing oversupply fears. So the technical trading setup. So today we're going to discuss the euro dollar, the pound US dollar, pound yen, Australian US dollar, euro Australian dollar, gold, WTI oil, and dollar index. If anybody has any additional questions of pairs of they find of interest, please be free to ask while we're discussing the current eight. So I have a technical chart here on the dollar index on a weekly time frame. So for an extended period of time, we've been saying that the dollar has been under pressure on a daily and weekly time frame. They've been, if you look closely on the weekly, prices are actually respecting the bearish trend. They've been consistently lower lows and lower highs, and there's a strong resistance around the 91. It's been in a range actually it's been in a tight range since late January, early February, and now I'm looking to see what fundamental themes are likely to elevate the dollar or drag it lower. As we said earlier, the dollar has found itself being a currency that is driven by conflicting fundamental themes. On one side of the equation, elevated expectations of higher US interest rates have supported the dollar. On the other side of the equation, we have the still lingering concerns of a potential trade war weighing on sentiment encouraging dollar bearish investors to attack. So technical traders, technical weekly traders will be looking at how prices react below the 91 level. Sustained weakness below 91 could encourage further downside towards 88. Alternatively though, if we do see a breakout above 91, this could be early signs of a potential end to an extended downtrend in the dollar index with further upside on the cards. I have a weekly chart actually of the euro dollar. So it's very interesting because I have the weekly and the daily, which suggest different pictures. The weekly, we can see it does fulfill the prerequisites of a bullish trend. There have been consistently higher highs and higher lows. Prices are trading above the MACD, and if you look at the 20 simple moving average, the euro dollar comfortably trades above the 20 simple moving average. So we can say that the euro dollar is actually bullish on a weekly time frame. But zooming closely on a daily, the euro dollar is lightly respecting a bearish trend. There have been lower lows and lower highs, and it seems that our prices are struggling to keep above the 1230 level. On last week, Thursday, we can see the impacts of ECB Mario Draghi's caution, which caused the euro dollar to crash over 100 pips. If caution continues to reign and investors continue to evaluate the possibility of the central bank moving forward with ending QE by the end of 2018, or if the unwelcome return of political uncertainty in Europe continues to weigh heavily on the euro currency, bears could be inspired with enough inspiration to send the euro dollar below the 123 level. Alternatively, though, you have to keep in mind that sentiment overall towards the European economy, the health of the European economy, economic growth is bullish. So when you add this with the possibility of the dollar weakening, Euro bulls do have a possibility to defend the 123 level with the next 1244 a potential level of interest. But this week on the daily, we'll be looking very closely to see how the euro dollar behaves around the 123. I have a chart of the pound US dollar loaded up right here. The story that continues to define the pound US dollar's erratic price action continues to revolve around Brexit uncertainty. It's funny because at the start of the year, the inflated optimism that the United Kingdom and the European Union would conclude with a soft Brexit outcome heavily supported the pound US dollar. But now it seems that the scenario of a theme is changing. There's still some uncertainty over the Brexit transition deal. And based on this uncertainty, sellers have been inspired with enough inspiration to actually track the pound US dollar lower. Technical traders will continue to observe how the pound US dollar reacts around the 13850 level. Much attention should be paid. If bulls are able to defend this level, the pound US dollar does have scope for further upside. But if you look closer at the technical lagging indicators such as the MACD and the moving average, they both cross to the downside. And based on this notion, there's a possibility that if the pound US dollar is unable to secure control above 1385, sellers could target 1375 and 1370. Gold. So here's a technical chart on gold on the daily, and this goes in line with what we said earlier about how gold is simply waiting for a catalyst to move in either direction. We can see for an extended period, gold has found itself in a very messy range, very wide, messy range with support around 1310, resistance around 135. It's bounced in this range for an extended period, and it's looking for the next big thing to take it back towards 1300 or back towards 1355. Now, technically though, prices are trading below the MACD And if you look closely at the moving average on a daily, it's trading below the 50 simple moving average. So it could be fair to say that if we have a situation where gold continues to remain below the 1324 level this week, bears could be inspired with enough confidence to attack 131 and 130, which is seen as psychological support pivotal level. Alternatively, though, a situation where we have an unwelcome return of risk aversion, or dollar weakness, could push gold back above 1324 with 1340 and 1360 levels of interest. For those who like to look at crude oil, so with crude oil, it's oil prices are flickering violently before burning out, or could bulls come to the rescue? Let's see how this week's crude oil inventory report points out. Naturally, a build would fuel the oversupply concerns, opening a way to further downside on WTI crude. But if we do have an unexpected draw, well, this could continue to support the ongoing optimism over OPEC supply cuts, rebalancing markets, which may result in further upside on WTI crude. Weekly, though, does suggest that bulls are slightly exhausted. And if you look closely on a daily as well, it's been bouncing in this tight range. Sustained weakness below 61 could encourage a decline towards 60 and lower, respectively. Taking a look at the pound yen now. The pound yen, notoriously volatile, it's printing to be an interesting setup because we have sterling weakness, all thanks to Brexit uncertainty. At one point, we had yen strength amid risk aversion. So, if we have a situation or the combination of ongoing sterling weakness and yen strength, could encourage pound yen bears to make a move back towards 147 and potentially lower. Technically, though, the pound yen is under pressure on the daily charts. There have been consistently lower lows and lower highs. The MACD has traded to the downside here, and prices are trading below the 20 simple moving average. Initially, we had a strong support around the 147, but if the 14850 regions acts as a next strong resistance level, bears could be encouraged to target 147 and potentially lower. A breakout on daily close above 14850 could signify the end of the downtrend on the pound yen, with the next key level of interest at 150. Taking a look at the Euro Australian dollar on the daily charts, wow, the Euro Australian dollar is under pressure. It seems that there was a stubborn level of resistance at the around the 1.60 regions. The fact that we've seen a strong decline since then, with prices currently trading around breaking below the 147, could suggest that the Euro Australian dollar has the potential for further downside this week. Yes, there's been a 157 as a sticky level, and there's another level of support at 156. But below this regions, the Euro Australian dollar has the potential to trade towards the 148, 155 levels. A situation though where the Euro Australian dollar could break above the 157 or this week can encourage an incline back towards 15775. But I'll be looking a very close look at this. And next week, when we have our next week ahead webinar, we'll see how the Euro Australian dollar setup plays out. So, ladies and gentlemen, thank you very much for attending this week's week ahead what to look out for. And for those who missed the first parts, please be free to check out the post-recorded version on my FXTM. Also, be free to subscribe to our YouTube channels for more live market reports on the markets on Tuesdays and Thursdays. So happy trading, guys, and I'll see everybody next week. Thank you.